Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's June 17th. This will be our chart lesson for today. And a couple of things real quickly. Wednesday is a trading holiday, so no trading on Wednesday. Make sure you're aware of that. I think the market's open till noon, but don't try to trade those days. They're not worth it. I mean, if you want to sim trade, you could sim trade it, but don't try to trade those live. It doesn't mean you couldn't get some movement before lunchtime, but generally there's not a lot of volume and not much movement, and you can just get stuck in a trade, and you'll probably regret it. So don't try to trade those days live; they're not worth it. So we'll take Wednesday off. No mid-morning chart. No YouTube lesson that day either. So just be aware of that. And let's take a quick look at we. It was rollover day today, so we roll over to the new contract. This is the September daily chart. And looking at this, it does not look like we've had a break outside this channel, this green one. So I think it's still in play. I think this blue one's still in play. My guess the target is this upper trend channel line, which will probably get us up into the brown, maybe on the other side of it. And so we're probably still headed higher here, be my guess. Just looking at this. So, yeah, this market's going higher. I don't think we're going to see any major corrections until after the election. That's my opinion. We've talked about this several times. I think this thing's going to go higher until at least after the election. So doesn't mean we can't get another correction like this one back down to the lower trend line, or even a break of the trend line. But I wouldn't expect any kind of major correction before election time, unless something crazy happens. I mean, the spark could set off anywhere in the world at any moment. War drums are beating all around the world. Anything could happen to set this thing off, but barring anything out of the ordinary, um, like some crazy event happening, I don't see this thing selling off before the election. So just keep that in mind. That's generally that's generally the way election years go. So and it looks like this is all this channel still in play. This shorter term one played out here, had the break and new high, and then we corrected, but we're back in this one now. And the big, larger green one looks like it's still in play to me. So at least on this contract, it looked like we had a close outside on the other contract, but not this one. Looks like we closed inside this contract here to me. So there it is on the daily chart. Let's flip over to the 2000 tick chart. You can see it's a large rally day. We didn't quite close on the high, but we closed close. So another big rally day. Let's flip over there and take a look at it. And here it is. And you can see we started out in this range, but we pushed through that pretty quickly. Found some support, and it was off to the races, straight up almost. Um, from about lunchtime on, not much happening. I guess let's put our measured move on here and see. Notice that we made that measured move to the tick there. No surprise, and then we bounced, but mostly down. This is all after 2:30. Doesn't really matter. But it was up until we were retesting the highs at 2:30 here before we finally sold off some. And we're just working sideways really from about 1 o'clock, just prior to 12:30, 1 o'clock on, just working sideways. We had a huge rally. I mean, off these lows just before 9 o'clock to the highs today was 70 points. If you could catch one runner on something like that, and this wouldn't be a hard runner to hold because there weren't any major corrections. If you could catch one of those 70 points on a single runner, it'd be a pretty nice day. Be a pretty nice month actually for most small traders. So um, yeah, that's the kind of thing you want to catch one of these occasionally, at least get a large portion of it. Again, this one wouldn't be hard to get it all because there's not any major correction in here. It's just straight up. Maybe you exit here when you break out. So fairly nice move today. But let's zoom in here. We started off to the downside. You can see we got a break here, moved to a new low, and then we made a triple test here, and it was off to the upside. There was a news item here at 7:30, so you had to really be flat from about 7:15 on. So really wasn't anything much going on until you had to sit patient today. There's no real shorts here, and you got to be careful going long. You don't really want to go long here either because the trend is down, and this is the first break. And you can see we had a close outside, 2 legs to a new high, then we sold off and made a new low. We made a slightly higher low, and then we made an even higher low, and every one of them are testing this support here. And somebody sent me this right here. They went short on this bar right here because it was a second entry short. But hopefully most of you can see that why you can't go short there into that support. That's just not a good move. That's a huge mistake on that trader's part. In fact, it's a first entry, second entry long when it breaks higher there. And you got a triple test, quadruple test down here. No reason to go short there. If you're doing anything, you're looking for a long. So I like going long there on that quick triple test and the second entry long. I don't think I trade that on the engulfing bar, but when this closes bullish and you're seeing rejection there, if it breaks higher, go with it. And there it is. There's another second entry right here. Zoom in a little more. Unfortunately, the signal bar doesn't qualify, and you can't go long on the next bar. Somebody always asks me that. No, the only bar you can enter on is the signal bar, which is the one that makes a swing low, or if you were going short here, it'd be the one that makes a swing high. There is a second entry short there, but we just bounced off the lows of what looks like a range, so no reason to go short there. So we're headed higher, just a first entry, and then we get our break here, and you get first entry, second entry. So it's a third entry by the time we get down here. It does get a close outside and a new low all in one bar. But I don't think you can go long out of that congestion right there being the first break, because there's a good chance it's going to try to make a retest, which it tries to go lower once, twice, and it fails, and it goes higher. This bar is really close here to being able to say, hey, maybe it's a good signal bar, but it's still a first entry because we make a new high here. But you might say first entry, second entry that fails, although it's not necessarily where you're looking for a failure. So I just think you have to skip that. It's just too congested. And then we're just working higher here. Again, there's a pullback, but it's on a breakout, so you don't want to take that. And you get this failed break. But this looks really congested. You're way away from the EMA. I'd wait on a lower high. You might, you could argue for that to be green because you do have your break here and 2 legs up. So we're probably going to at least come back to the EMA, but this is all about timing here. And you could get one more push up that stops you out before it comes back. So just be careful with it. You're better off to wait on a lower high, and we don't get one here. You might argue, hey, we get one way over here. But I think it's too late to call that a lower high. You still might take it just as a short off the top of the range. I mean, you could argue, hey, we tried to go higher multiple times there. So it's another one. Maybe you take that. This is playing the range. But we still have this trend line in place here, and we're getting really close to it. And when we come over right here, you get a first entry, second entry, but you've also, you've tested the support a few times, and you got confluence here. You've got the EMA as support, you got the trend line as support, and you got the range as support, and you got a good signal bar. Just go long right there. As long as you got room to get out, go long. This thing takes off. There's a little higher low here, but you can't go long right into that resistance. You have to get long down here. It just takes off. Here you get a 1, 2, 3 triple test. There's not a lot of room back to the high, and you can't trade that on the engulfing. It's not really even an engulfing bar because those are all equal lows, so you can only go long above that bar. It is a second entry as well. It was actually a second entry when it broke above this bar, but I'm not crazy about it. But you could say, hey, it's a triple test. and you do have a close outside. So maybe you take that trade. It's just not much room back. Maybe if you can get in it, let it break higher and drop a limit order and get in it far enough back to give you room to get out. Maybe you take it that way. That's a possibility, but it's just not a great setup. And of course, you run up, and then you've got a correction here, right back to um, another possible trend line here. You set it on this first swing here, and that's a first entry, and it backs up, and then this, when it breaks above there is a second entry, and then there's a higher low. I'm not as crazy about the second entry. You do have a close outside and a new low on this correction here, and then so maybe you take that one. It's a second entry long, and it's obvious this khaki one's played out, and it is a pullback that tests the breakout area 1, 2, 3, 4 times, and it goes higher. And then you can see it bouncing off that trend line. It comes back here and verifies it on a higher low. So I like going long right there. And you see that one takes off. And then you get another first entry, comes back again, second entry. And you can argue there's a triple test right there, and there's a nice signal bar. Now, there's not much room to the high, but you can tell now this has become a very strong trend. So if you get a decent setup off a key entry point, take it. And you also have the midline in there playing. There's a higher low here, but I think that moved too far. At this point, if you recognize this is a really strong trend, any signal bar back to the main trend line, maybe you take it. I always mark those green because you really need to know what you're doing. But any of those are a possibility if you understand what's going on there. It's a really strong trend. You can see how straight up that is. We finally hit the other side of the channel. We correct back to the midline. And you get a first entry, second entry, and then you get a higher low, but it looks a little congested. But it gives you yet another higher low with a real nice reversal type signal bar. So maybe you go long right there. I like that one. Odds are we're probably headed to the upper side here. It didn't happen. You get plenty to scalp out, but you just don't have enough to, doesn't quite get to the upper side before it comes back again. But it gets a couple of points plus there, so it worked well. I mean, you had plenty of room to get out before you get to this high, and you'd be really worried about this upper side. That's what your target would be. We didn't quite make it here, but there's no real short setup either. And then we're bouncing off the lows again. I didn't mark this one. This one's a possibility because you could argue you've got a triple test there, but it just looks so congested. There's also somewhat of a trend line working down here. There's a couple of different ways you might draw it. Looks more like that in my opinion. So it's kind of hard to justify going long right into that EMA and that trend channel line working down there. And you can see it holds until it tests this again, and then it takes off. Now there's a higher low here, but it's just a first entry, and there's a tick or two to the high, so, and it's right at the midline. I'm not crazy about it. But here you get a close outside, move to a new high. Again, this one's worth considering here until you get an inside bar and it doesn't break lower. Then it looks like congestion. So so you can't really enter there. I don't think you really want to enter that on the engulfing bar either. So I think you have to wait for a break below this, and you don't get it till we're breaking below this way up here, and it's not a good enough signal bar, and it's right at 230. So that takes us into the 230 hour. So I don't think there's anything else there that you can justify entering short in. But there it is again. Very nice rally, very strong rally. Only news item was this 7:30 news. Obviously be flat 10 or 15 minutes prior. And just not much else we can say about today. It's just a real strong rally day. Again, it was over a little early, then mostly sideways after that, but looks like we're trying to go higher now. Market just opened back up 3 or 4 minutes ago. But anyway, just a reminder, Wednesday's a holiday, so we'll be taking off Wednesday. I think it's Juneteenth, they call it now. So the markets will be closed for that. And what else? So it seemed like there was something else. Oh, it was rollover day. If you hadn't roll over before tomorrow. And this is something I haven't talked about in a while, but I recommend that you close at the end of every day. You clear your charts off. Hit your clear button right here. Clear your charts off, and close them down, and then open them up fresh again each morning. There's a couple reasons for that. As you start to leave all this stuff on there, it'll start to gum up and move slowly, and you'll have issues with the software. So by keeping all this stuff cleaned off, you have less problems with your chart freezing or sticking or getting gummy feeling. And you don't need that with trading. You want everything to be instantaneous, including when you make your trades. So you can't afford for your chart to freeze even just for microseconds hardly, because it can affect you. So make sure you do that. And there's a couple other things. Let me show you on data series here. If you want your chart to be close to mine, make sure you open up your data series. Again, just right click on the chart with your mouse and click on data series, and then it'll pop this box up. For days to load, pick 21. Then on trading hours, make sure you have CME US Index Futures ETH, and then check this break at end of day. And if you do that and you close down and restart every morning fresh, your chart will look much closer to mine than it might now if you don't have this same stuff in there. So make sure you always remember that. That's important. And if you do that, your chart will have less issues because you're starting it fresh every morning. You're keeping it cleaned up. Always remove all your previous day's stuff. What I'll do before I close up today, I'll hit that trash can there, and it'll remove all the drawing objects, and then I'll shut down, and then I'll open it back up fresh in the morning, and I won't have any problems with my chart freezing or sticking or getting gummy and all the other things that come when you've got too much of these drawings on from the past, or you're not shutting down and restarting every so often. Just do it every day, and you'll have better trading performance because of it. I can assure you of that. So anyway, I think that's going to do it. We'll wrap it up. We're done for today. We'll be back tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.